Alright, so welcome to this last part of the technical analysis lessons. And again, once you've learned all these technical analysis tools, you will then later learn how to put it all together into a strategy. Alright, so this is a very powerful tool in TA, and it's called Fibonacci ratios, as used in retracements and extensions. Now, it sounds a bit complicated, it's actually really simple. Now, remember that when you see any stock or any asset in a trend, what happens? It doesn't go up in a straight line or go down in a straight line. Remember, it moves in waves. Recall that? So on an uptrend, again, how does it move? It moves in what we call an impulsive wave, like that, right? And then a corrective wave, and then the next impulsive wave, and the next corrective wave, and then it continues, the trend. So we call this the impulsive wave. The impulsive wave is the wave in the direction of the trend. So in this case, the trend is an uptrend. Okay, so this is what we call the impulsive wave, or I call it breathing out wave, right? Breathe out. Okay, and we know that it can't breathe out forever. It has to eventually breathe in into what we call a corrective wave, like so, right? So the corrective wave is the wave that goes against the trend direction, but it has to correct in order to find a support over here, and once it's done, it will then start the next impulsive wave again, and the next corrective wave, and it continues, right? So a very important question that we need to ask ourselves is that when a stock corrects, right, when it goes down, how much does it go down by? Is there a certain percentage of ratio where it tends to fall into before stopping and continuing the trend? And lo and behold, there is. All right, it has been found that when the price comes down, okay, it doesn't come down randomly, right? You go down by a certain ratio, okay, and that ratio is what we call the Fibonacci ratio. So how did this whole thing come about? Let me give you a bit of a history lesson. I think it's really interesting. And once you understand the history, you can see how we can apply this mathematical phenomenon to understand when these corrective waves end and when we can get in, when we can buy to catch the next impulsive wave. That'll be really cool, right? Okay, so let's get started. Let's go through the history of Fibonacci. So Leonardo Fibonacci was an Italian mathematician that lived centuries ago, and what he did was he came up with the Fibonacci number sequence that you see over here. So how did he create all these numbers? I think he was really bored one day, he had too much pasta, had too much wine, and he said, okay, what if I do some crazy shit with numbers? So what he did was he wrote 0 and he wrote 1, and he said, what would happen if I added 1 to 0? So if you add 1 to 0, you get 1. If I add 1 to 1, I get 2. If I add 2 to 1, I get 3. If I add 3 to 2, I get 5, and so on and so forth. So that's how you generate the Fibonacci number sequence. Now, so what? Now here's the so what. Here's the interesting thing. As you create this series of numbers, you find that every time you take any number, right? If you take any number and you divide it by the previous number, you always get the same ratio. Always, right? If you take 144 divided by 89, you get 1.618. If you take 233 divided by 144, you get 1.618. So every time you take a number divided by the previous number, you always get 1.618. This is called the golden ratio. Now the inverse of it is 0.618. It is also known as the golden ratio. Okay. Now this is expressed as a fraction, and if you express it as a percentage, it will be 61.8%. 61.8%. So this is the main ratio that is really, really interesting. Okay. So again, you can also get this by taking any number and dividing it by the bigger number. So if you take again 89 divided by 144, 0.618. Take 144 divided by 233, 0.618. Again, that's called the golden ratio. Now, if you take 1 minus 0.618, what do you get? You get 0.618. 0.382, which will also be a very important number that you will come to find in a while. So just have these two numbers in your mind for now, 61.8% and 38.2%. By the way, it's also interesting to note that if you take any number and you divide it by a number two numbers down, like 89 divided by 233, you also get 0.382. Now, here's the freaky thing, right? This golden ratio appears mysteriously everywhere in nature, architecture, biology, and in stock charts. That's right. So, the next time you go out, go look at a tree and count the number of branches on a tree. You find that it follows the Fibonacci number sequence. So, for example, you have got the tree trunk, which is 1, and from the tree trunk, it will branch into 2, and from 2, you'll branch into 3, and 5, and 8, and 13. Interesting. So again, if you take any level of branches, like 8, and you divide it by the top branch, guess what you get? 0.618. There you go. Have you seen those seashells, those nautilus seashells with those lines, curvy lines? It follows the Fibonacci number sequence. So if you measure the length of one line, one ring, if you will, one ring, and you divide it by the outer ring, guess what you get? 0.618. Freaky, right? If you take the human DNA, looks like this, if it's magnified a few million times or billion times, if you take the width of the DNA, which is 21 angstroms, and you divide it by 34, which is the length of the DNA, it's 0.618. So can you imagine that even our DNA follows this golden ratio? If you look at a person, right, the perfect person was drawn by Leonardo da Vinci with the perfect ratios. And again, it's all Fibonacci number sequence, right? So if you take the length from your belly button to your foot, divide it by your height, you get 0.618. If you look at people who are really good looking, if you take, again, the width, divide by the length, you get 0.618. So go measure yourself. If you don't have that ratio, it means you're ugly. I'm just kidding, right? But it shows that there's actually a mathematics to beauty. People are termed beautiful by other people because somehow they follow this Fibonacci number sequence. All right, so anyway, how does this whole thing apply to trading? Here's the interesting thing. If you look at the way prices move in the markets, forex markets, stock markets, whatever market, they move in a Fibonacci sequence. Okay? So let's take a look how we can apply it then. So first of all, let's look at a stock on an uptrend. Okay? And again, this only works when it's trending. Okay? So on an uptrend, like I mentioned earlier, we have got always the impulsive wave. Okay? The breathing out. Now, the start of the impulsive wave, we call it A. The end of the impulsive wave, we call it B. And after the impulsive wave, it will correct to a certain level. Let's call that C. And once it reaches C, guess what? It will stop going down and it will start going up again, creating the next new impulsive wave. Now, as a trader, do we want to know where C is? Of course, we want to know where C is because C tells us that it has finished going down and its time is going to go up again. So we want to buy the stock, or we want to enter a long trade just as it starts its new impulsive wave. Does it make sense? Okay. So the question is, how would we know that it is the end of the corrective wave? How would we know? Now, I've talked about previously that usually at the end of the corrective wave, you find the price hits some kind of support level, right? Some kind of support. Now, it could be a horizontal support or resistance. It could be a moving average. But at the same time, guess what? Very often it hits a Fibonacci ratio, okay? So what is this ratio? If you take A to B, we call this, Now, A to B, again, it could be anything. Could be $20, could be $5, $100, depending on the price of the share, right? But from A to B, we call this 100%. All right, let's take A to B as 100%. Okay. Now, what has been found in the markets is that whenever the price makes a correction, when it makes a deep enough correction, guess what? It will tend to retrace 50% to 61.8% of this move up. Does it make sense? So for example, if from A to B, if A to B was $10, for example, right, then B to C would be 50%. It'd be $5. There we go. Okay, but very often it will retrace to 61.8%, and 61.8% is the biggest retracement it should get before it ends and continues the next impulsive wave. Now, sometimes the correction could be a shallow correction where it corrects just a little bit and then it goes, right? Now, whenever it's a shallow correction, guess what? Guess what's the ratio? That's right, it's 38.2%. There we go. So once we understand Fibonacci, we're able to enter the stock at a level that has a high probability that it is going to reverse because it's a Fibonacci level. Now, some traders would enter once it hits the 38.2%, but personally for me, I don't like shallow corrections because it could go lower, you never know, right? So I like to take it when I know that it has reached the end. So I like to take it when it has reached the 61.8% retracement level, or if not, at least the 50% retracement level. So let me show you how it's done on the charts right now. So right now I've got the chart of the S&P 500 index, and this is, you can see, a 3-year chart, and you can see again prices move in wave patterns, A, B, C, so on and so forth. So let's look at the most recent 1-year period. Let me just zoom into the last 1 year. There we go. So can you identify where are the ABC patterns? All right, so let me just zoom in here, for example. So over here you can see this was a A. A is the start of the impulsive wave. That's a B, and that was a C. Right, so this was a very small correction, right? A, B to C. So the question was this a Fibonacci ratio? You can check it out. How? Now, using any charting software, you can go to your drawing tools and look for Fibonacci. So over here, it says Fibonacci Retracement. There we go, Fibonacci Retracement, right? So click on the retracement tool, and what you do is this. You start by clicking on A. So click on A, right? And then you drag it to B, which is here. This is B, all right? And you can click anywhere at B or along that same price. So we're going to click on B. Boom, there we go. So what do you see? Do you notice that this, it went down, it corrected, and it found the support at the 38.2%. Can you see that? So A, B, and C is exactly at the 38.2%. So I told you earlier on, a shallow retracement will be a 38.2% retracement level. Okay, and you can do it over and over again. For example, if you look at here, right, A to B, right? So A is the start of the impulsive wave, B is the end of the impulsive wave. Let's click on B. Okay, so again, what do you notice? Again, this was a shallow retracement. It found support at the 38.2% level. Okay, but like I said, I don't take shallow retracements. I prefer the bigger retracements. Let's look at one over here. A to B. That's B. Sorry, that's B. Okay, and voila. Notice that this retracement, okay, A, B, C, it reached the, that's right, 61.8% level. So this was a textbook retracement to 61.8%, and that's how I know it's time to buy over here once it has hit that level and it's going to start the next impulsive wave up. Okay. If we go further there, now let me show you something interesting. If you take the bigger wave, right? Like you could take this whole thing as one big wave, by the way, right? So this could be A, B, C, but this whole thing could be one big A, this could be one big B, and this could be one big C as well. So there's a wave within a wave within a wave. There are many waves within waves. So if I take A over here and I drag it to B, what do you notice? That's right. Notice it retraced exactly to 38.2%. Very, very powerful. So every time it retraces, it will hit a Fibonacci level, either 38.2%, 50%, or 61.8%. So it helps us to kind of like anticipate when it has reached the end of the correction and when it's going to begin the next impulsive wave. Now take a look at this example, right? So again, over here, this is a more recent one. This is A. Okay, that's B, and that is C. Okay, so let's look at this correction over here. So A to B. Can you see that it has retraced, right? A, B, C. Can you see it retraced exactly to the 61.8% level? It is uncanny. Can you see that? Right? Now, not only that, but if I put in the moving averages, let me put in the moving averages for you. All right. Notice that. So notice the A, B, and the C. So notice that not only was this a 61.8% level, but it also coincided with the moving average, the 150 moving average. So you will learn later that we call this a confluence point. A confluence point means the price hits a level where it hits multiple levels. It hits a Fibonacci level and it hits a moving average. Whenever you've got two levels of support, a moving average and a Fibonacci level, it is extremely powerful. And that gives us a lot of confidence to start buying here, which I did. If you watch my earlier videos on YouTube, I started buying in order to catch the next wave all the way up. So that's how we anticipate, through Fibonacci retracements. So let's take a look at how this would work on individual stocks. So from the S&P 500, let's look at, say, Microsoft as MSFT. All right, so there we go. So this is Microsoft, again, on a very, very clear uptrend for the last 1 year. But let me zoom back a little bit so we see a longer perspective. You can see Microsoft has been a really, really great stock to hold for the long run. All right. Now let me just zoom in over here, and you can see again all the different Fibonacci levels, right? So again, can you identify the ABC pattern? Again, that's A. All right. That's B. And that is C, right? A, B, C, right? You can even take this as a A, as a B, as a C. So again, there's a wave within a wave within a wave, right? So there are many ways to cut it. So if you take this as the ABC, let's take a look at that, right? So this A, right? A to B, that's B. There we go. So you can see that this was a 61.8% retracement level, right? A, B, C, 61.8% retracement level. Notice how Fibonacci is respected very clearly. If you take this as the A, right, drag this to B, right? If you take this as the B, you can also do that. That would be the bigger wave, right? And you can see again A, B, C, and you can see it finds support exactly at the 38.2% level, right? Very, very reliable. And you can do it over and over again. Again, you can take this as A, right? A to B, and voila. You can see it retraces to 38.2%. All right, shallow retracement 38.2%, deeper retracement would be 50% to 61.8%. How about this one, right? Check this one out, right? So again, you can see A, B, C, right? A, B, C, again, 38.2% support level over there. How about this one? A to B to B to C. Now this you can see was a deep retracement. It found support at the 61.8%, right? A, B, C. So very reliable. So later you'll see how I actually apply it to identifying and taking the highest probability trade setups every day, whether it's a long setup or a short setup. Okay. Now let's fast forward to where we are right now. So we are here. Now, if I wanted to place a trade on Microsoft, for example, when would I want to enter Microsoft? Now again, I like to look at the moving averages combined with the Fibonacci ratio. So you can see, where was my last A? This was my last A, right? So that's A, and this was B. Okay. Now you can see there's a minor retracement here to minor retracement. I'm not interested in that. So I like to enter trade when I've got a deeper retracement. Okay. So I ideally, where would I want to enter, either as an investment or as a trade? So again, I could use Fibonacci, and I could say, okay, let's identify that's the A and that's the B, right? That's the top of the impulsive wave. And notice that I would want the price to come down to at least $144 before I enter a buy here for a short-term trade. Now, why 144? What's my rationale? Because number one, you can see that the 50 moving average, right? This moving average acts as a support level, right? So I expect it to hit the blue line, but notice that it comes below the 50, right? Just below. So I want it to come somewhere around here. Sorry, not 144. My bad. I want it to come to at least 142 thereabouts, right? Why 142? Again, because this corresponds to a 61.8% retracement level. So I want it to retrace to a 61.8% level that coincides with that 50 moving average, where you can see that in the past it tended to go slightly below the 50, and then it would then go all the way back up. So my target buy price would be a 142. All right, so you can see how I use Fibonacci combined with moving averages to decide where I like to enter the stock. Again, it could be an investment or a trade setup.